All I'm trying to do is set the stage for where we are at this moment. Look no further than Nvidia today to see how algorithms and high-frequency traders are taking over the tape. A major factor in Nvidia's decline and the market's retreat is the company's high amount of zero-dated options. Alright, so if your main fear about the mega-cap portion of the market was high valuation a month ago, then today's projected PE for Nvidia is 32.5, compared to 41 times a month ago. Meta is now at 21.5 times, down from 24.5 times a month ago. Apple is currently 29 years old. Amazon is currently 31 years old. The Alphabet used to be 23.5, but now it is 19.5. Today, Microsoft is 30 years old. I suppose what I'm trying to say is that these stocks have significantly declined. If the valuations were previously irrational, are they now more reasonable, Jimmy? Today, Barclays changes its technology. They go overweight, after a significant 16% decline since July. Robson announced yesterday that he has finally, yes, for the first time, purchased Nvidia due to the stock's steep decline. In light of this value correction, what should I do? Yes, as I believe we should appropriately refer to it. Rob, in my opinion, is a prime example in this regard. Robson is purchasing, and while I didn't hear all he said yesterday, I believe he added, look, it can go lower from here, of course. However, same valuations and share prices are probably going to be higher if you move over the next month, which is what I was saying a moment ago, and look to the end of the year. We cannot just examine multiples in a vacuum, and there is a very straightforward explanation for this. The multiples must be compared to the growth rate of earnings per share. I see you nodding your head as a growth investor, Carrie. With this, you know precisely where I'm headed. The price-earnings to growth ratio, or PEG ratio, is important. If you consider Nvidia to be maybe the most talked about stock when asking is it overvalued, it has a PEG ratio below 1, is growing its profits per share in the mid-30s, and has a 32-fold multiple in the future. That's a very alluring valuation for anyone familiar with PEG ratios. I do believe that it will reach a new all-time high from now until the end of the year, but that doesn't mean it can't go lower. I know it has. But are there any indications that things are moving too far in the opposite direction? For instance, Micron is planning to start its buyback again today. We can display the Micron chart. Are they acting in this way because the stock has lost about 30% in the past month? Does it look better now? Was it overcorrected? You, not me, should make that decision. Nevertheless, it poses that query. By the way, Adam Parker used to work as a semiconductor analyst at Bernstein before moving on to other positions on the street. He is well familiar with this area because he was with me on Closing Bell yesterday. Well, there's been a lot of destruction, he added. I want you to hear his thoughts on whether the chip space is now appealing. Over the past 25 years, I examined the 10 most recent downturns of 10% or more. After examining which industries and stocks typically experience declines, I asked myself, well, what has happened in this last cycle since July 16th? The semis are down, and the semi-cap equipment is down more than it generally would be in relation to everything else. I sorted by the largest discrepancy. All right, Joe, I come to you. Attractive purchases, huh? As always, Adam, you're right on. I examine the names of the semi-equipment. Look at the equipment names. KLA Corp, Lam Research, Applied Materials, if we're researching valuation and looking for lower valuation semis. They all have solid fundamentals in place, but they have all recovered from notable excesses of what I would call positioning and extreme bullishness. What else do they possess? They have buyback authorizations, and we're approaching a time when we'll reopen that buyback window, as you said. It certainly provides some support in unique situations for stocks that you find interesting. But I'm not claiming it will be the last spark that propels a notable increase. This is crucial, so let me add a few more words right away. Earlier, I discussed the PEG ratio and the pace of growth in earnings per share. What happens if the growth rate is incorrect? I believe that examining the capital spending plans of companies like Google and Meta gives you a great deal of reassurance that the growth rates are correct. Additionally, companies require chips to expand their AI efforts, whether it's Micron's high-bandwidth memory or Nvidia CPUs. The first 50 customers receive 50% off anything in our store for a short period of time. This bargain won't last long, so don't pass it up. Hurry now to save a ton of money. Shop now using the link below to be among the first 50. They also have the money to do it. They have the cash flow to do it, but they're planning for years ahead of time rather than taking on more debt or anything else that might be impacted by market turbulence. Therefore, those growth rates are supported by the fundamentals. When it comes to processors, for example, Nvidia has seen an 18% decline in the past month. Your Broadcom is down over 16%, isn't it, Carrie? You've got a pleasant recovery for a few items, such as AMD, which you spoke with today, and Piper, which Joe owns, which maintained its top selection. However, what about the idea that chips were overcorrected? Yes, so if you look at the charts of several of these, and I'll give you examples, here's one way I guess we've been looking at it. Broadcom and ASML. At the moment, they are both positioned on significant moving averages. The 100-day for Broadcom and the 200-day for ASML. Micron continues to descend in a straight line. You don't know where it will hold, but if you keep an eye on these stocks over the coming days and take a little nibble, you might be able to see established levels of support and keep buying more if you don't already own any. It's also true, in my opinion, that you add up the capital expenditures that you assume major corporations like Apple, Google, and Amazon are making on chips. The big cap companies collectively have $200 billion, and someone has to take that money. That someone is the chip manufacturers, primarily Nvidia, but not exclusively, followed by the equipment manufacturers. Are you remain optimistic about the market as a whole after a week in which we received advice from ARM, Western Dig, Intel, and Microchip? No, my bullishness is limited to firms that are actually assisting Nvidia or heading to the GPU. You see, during the Amazon conference call, they indicated that Nvidia is sold out, demonstrating their complete awareness that they must invest in AI. They've been sold out for a while. They are most likely sold out through 2025. Indeed, the expenditure plans that we have heard and that have been confirmed by companies including as Microsoft, Meta, Alphabet, and Amazon have not deterred anyone from believing that Nvidia will continue to be the primary benefit. However, at this moment, the market is undergoing a significant rotation. In the end, consumers are worried about whether the Fed is falling behind, but none of it seems to address the main issue, which is that Nvidia may be sold out for some time to come. Indeed, if you pay attention to Amazon, they must undoubtedly create their own, but that is a defensive tactic because they are unable to get enough. Here, you can see how they design and build their own chips. Yes, this is how I view Amazon, and I believe it's significant given how badly the stock is down today. I would purchase it. Amazon must install hangars and purchase a large number of planes because they are aware of the high volume of business. Now, you don't. When you purchase a large number of aircraft, you don't have passengers in them. So they purchase the aircraft first, incur significant costs, and then you have to wager that they are correct. I'm willing to wager that Jassy is correct. Another way to look at it would be to say that they are purchasing a Stradivarius, which is something you have to learn, unlike a violin. Both learning and teaching it are a little more difficult. I'm only looking for an analogy to help folks comprehend that it's taking a while, inferentially. The fact that they are unable to just flip a switch is upsetting people. People are like, are you kidding? When they bring up the Olympics or whatever. I mean, the nation is stuck in the year 2012. They're not buying as much after all, and they're watching the Olympics. And the reason they are purchasing is because they, not me, are watching the Olympics. Yes, I am aware that was strange.